and also get the pleasure of working with the Chamber on programs like this. We got this WOW webinar series over a year ago in order to bring experts directly to business owners, operators, and others who can assist them in tapping into resources and staying apprised of the constantly changing environment. Today, we are going to be talking about the Restaurant Revitalization Fund, and we have some really great resources and experts that are going to walk us through, hopefully help equip you to talk with your members and those in your own businesses to help equip people to tap into this fund. A few logistical details before we get started. First, thank you to our sponsor, Bank of America, who makes this possible without any cost to our attendees. Also, Reach King County, that focuses on retention, expansion, and collaboration as a resource for small businesses. And of course, Business Health Trust, who I am glad that we're able to be partner in this as well. If you have any technical details during the webinar, please use the chat function and the Chamber Events team will do their best to help troubleshoot anything that might pop up. If you have questions for our panelists throughout, and I encourage you to ask questions as we go, please use the Q&A button so that they can track those, I can track those, and we make sure we get to all of the questions during the presentation. We also will have closed captioning on today. If you would like to turn that off, there is the instructions on the screen, but you click the CC button, live transcript, and you can hide that subtitle. And lastly, this webinar will be recorded. And just a reminder that this is a point in time, and as additional guidance or other things might change, just be mindful of that, but this is definitely a great resource for you to look back on. You will get a post-event email from the Chamber that will have a link to this recording, as well as some of the resources that our speakers are going to talk about today. You can also find the recording on the Seattle Metropolitan Chamber of Commerce website on the event page. All right, now on to the fun part of the presentation here. Steve, John, Janie, I invite you to turn on your videos. Welcome. Thank you guys so much for being with us today. Steve, you have been a regular on these webinars this year, and I appreciate that, from the Washington Small Business Development Center. We have John Lane, Director of Local Government Affairs from the Washington Hospitality Association, and Janie Sacco, Marketing and Outreach Specialist from the Seattle District Office of U.S. Small Business Administration. Those were mouthfuls, guys. I'm sorry that I messed them up. I'm still waking up, I guess, even at 11 a.m. So John, I would love to, just hear from you a little bit. You are in the hospitality space, and just kick us off with a few words before you turn it over to Steve and Janie.
Sure. So thanks a lot. Yeah, so the Washington Hospitality Association represents over 6,000 businesses, lodging, restaurant, and entertainment. We also, I and my team on the Local Government Affairs represent the Seattle Restaurant Alliance and the Seattle Hotel Association. And we actually were working downtown last March when other larger organizations said that they were going to start working from home, and so we transitioned to that as well, thinking it would be short, but finding out, as we all know, it took much longer. The Hospitality Association, in partnership with the National Restaurant Association, started advocating for a restaurant-specific fund, starting just a few days after kind of nationally everything closed down, so it was mid-March. And throughout the last year, we've been advocating for what sort of became known as the Restaurants Act, but we also have been very engaged in the Paycheck Protection Program, the Employee Retention Tax Credit, all of those kinds of programs that Congress, was able to put together. The first round of PPP and the second really helped restaurants kind of survive this past year. This Restaurant Revitalization Fund is something that would have been great earlier, and it's still going to be great now because there is a lot of time left in the recovery, because restaurants have been you know, sort of chalking up significant debts over the past year. They've been limited, particularly here in Washington and King County, limited in terms of the seating availability that they could have. And so, you know, at 25% capacity, most restaurants are losing money. At 50%, they might be breaking even. So it's going to take us some time to build out of this. We have been very committed from when the restaurant revitalization program started to look like it was going to pass as part of the American Rescue Plan to partner with other organizations, reach out, you know, through our own connections with the SBA and through national and getting information. And we have put together a toolkit. And I'll just share my screen here real quick. It's on our website, and I dropped the link to it in the chat, and would encourage you to go to our webpage and see this. Here we have sort of an explanation briefly, and then we have all the important SBA links, frequently asked questions, articles, webinar and training. We've done multiple webinars ourselves, and also webinars in partnership with the National Restaurant Association and the SBA. We also have, you know, technical assistance. You can see the chamber right there is one of our main partners working on this. So this is kind of an overview of information. You know, I will weigh in here, but I think you've got, you know, sort of the real experts here with Steve and Janie today. So thank you very much for having us be a part of this today.
Thanks, John, and thanks for sharing that link. That will definitely be one that we will include in our post-event email today. All right, Steve and Janie, I will turn it over to you.
Thank you, Sari. We're certainly happy to be here and appreciate being able to do this again with the Seattle Metropolitan Chamber. I'm going to share my screen so that we can get going. We do have a slide presentation for you today. I think one of the greatest values, though, you had mentioned, Sari, is that this is going to be recorded for people to be able to look at later. One of the realities right now, which you'll probably hear us touch on a couple times, is that the program actually opened up this last Monday on May 3rd, and has seemed to so far go relatively seamless. I'm going to give you some updated information on this in just a second. But as we get going, I think one of the first things I want to share with you, so I may need to figure out how to stop the closed captioning because it's covering up my button to move through the slide deck, but I'll figure that out. Anyway, the information we're going to talk about today is as current as we have. And as Sari had mentioned, please put your questions in the chat. We really would like to have as many questions as possible so that those who see this recording later, we can address those and see if we can't, you know, be able to dig into some technical information. But that being said, Janie and I are not the final authority on this material. Rules and updates on this stuff is happening pretty regularly. And while we do have a lot of information for you today, it is subject to change. And we try and update this as guidance becomes available. Also, for those who are working with various both tax and legal advice professionals, and by the way, I understand, Leigh, that you have access to support for those who need assistance, possibly on a part-time pro bono basis for CPA. And at least I've understood that you have that. You may want to put the link to it in the, yeah, thank you for the tip on the CC, but on the Clark Nuber assistance for CPAs. But we really want to stress the fact that CPAs, attorneys, are really critical for any small business who is trying to seek the final tax and legal advice regarding how these programs impact. One of the things that's that I've mentioned, and that's real point of our doing these programs is that to assist not just small business owners, but those of you who are providing additional technical assistance, supporting bilingual underserved communities and other business owners. This is a program that really is designed to help you. And so if you see this recording later in this, we really want you to know that this is as much for you to help others as it is to go directly to a small business owner. So the update on the Restaurant Revitalization Fund, within 36 hours this week, by May 5th, we had 186,000 entries already entered into that. And those include restaurants, bars, other eligible businesses in all 50 states, District of Columbia, and Puerto Rico. 97,600 have come from restaurants, bars, and other eligible businesses owned and controlled by women. 46,400 from veterans, 4,200 from socially and economically disadvantaged individuals. Make sure I get this right, is 30,800. It was 4,200 for veterans and 46,400 for businesses owned and controlled by women. And so, I think that's a really great breakdown, sort of a cross section. And I think that this program really, without a whole lot of trouble, has been getting to as many people in the restaurant and food service business. We're going to talk about that eligibility here in a minute. Jeannie's going to pick up here as soon as this slide's done. But 61,700 applications have come from businesses with under 500,000 in annual pre-pandemic revenue, representing some of the smallest restaurants and bars in America. This is information directly from the SBA that was released on Wednesday. And so with that, Janie, are you ready? I'm going to turn it over to you and we'll move through the slides.
I am ready, Steve. Thank you very much for that update. I'm going to turn off my camera and just be a talking person because I always want to make sure I stay on these and sometimes I drop off. All right, so what is the Restaurant Revitalization Fund? The American Rescue Plan Act on March 11th, 2020 established the RRF, and the act appropriated $28.6 billion in funds, authorizing the SBA to do an award program for restaurants and related types of business entities. The fund will continue to be available until all funds are awarded and expended. The funds awarded to restaurants and related businesses must be used no later than March 11th, 2023. So there's plenty of time for recipients of the award to get through their spending process. Next slide, please. Eligible entities are businesses that are not permanently closed. If you're temporarily closed, you're still okay to be eligible. But again, so long as you're not permanently closed and the business sells to individuals, public or patrons assembled for the primary purpose of being served food or drink, you can apply for this program. So restaurants, food stands, food trucks, food carts, caterers, bars, saloons, lounges, taverns, snack and alcoholic beverage bars, for example, coffee shops and ice cream shops, are assumed to have more than 33% of their gross receipts for 2019 generated from the public consumption of food and beverage on site. Next slide, please. There are a series of other types of businesses who also may be eligible: bakeries, brew pubs, tasting rooms, tap rooms, breweries or microbreweries, wineries, and distilleries. And I'm going to talk about distilleries here in a second. bowling alleys, inns, and other licensed facilities or premises of a beverage alcohol producer, where again, the public may taste, sample, or purchase products. The rules for all of these asterisk businesses are that on-site sales to the public comprise at least 33% of gross receipts in 2019. And again, we're looking at food and beverage sales. Next slide, please. The eligibility for this program is not more than $5 million per location and not to exceed $10 million for the applicant in any affiliated businesses. The minimum award is $1,000. So if a calculation is done through the application process and the amount generated is less than $1,000, the award is not eligible. Next slide, please. Who are ineligible to apply? Well, here's the following. If the entity is a state or local government operated business, it's ineligible. As of March 13th, 2020, that focal date, if entities own and operate together with any affiliated businesses, more than 20 locations, regardless of whether or not those locations do business under the same name or different names, or are in different industries entirely, they are ineligible. If the applicant has a pending application or has received a shuttered venue operators grant, it is ineligible. If it is a publicly traded company, it is ineligible. Again, if it is permanently closed, as I said earlier, it is ineligible. Nonprofits are ineligible. And again, the award must calculate out to at least $1,000 to be eligible. Next slide, please. Now that we've gone over the types of businesses that are eligible, let's talk about the forms of organization. Most organized entities are eligible. So C corporations, S corporations, partnerships, limited liability companies, sole proprietorships, self-employed individuals, independent contractors, tribal businesses, and limited liability companies that are taxed as S corporations or sole proprietorships are also eligible. We in the state of Washington have social purpose corporations, which are also eligible, but they will either select C corporation, excuse me, or S corporation status on the application, depending upon how they are taxed. So it's a very broad brush, but again, you see nonprofits are not listed on this list. Next slide, please. If you have a business that is a franchise and it meets all other program requirements, it is eligible. However, the franchise must be listed on the SBA franchise directory. And that list or the franchise directory is in the application portal. However, you can also go to www.sba.gov before you start your application and enter SBA franchise directory in the search area and make a determination if your franchisor is on the list. If it is not on the list, then your franchisor may send all related franchise disclosure documents and any other agreements the franchisees have to sign to franchise@sba.gov for review of the SBA's eligibility criteria for a franchisor. If the franchisor does not meet the stated eligibility requirements, the SBA does provide them with sample information to change their documentation in terms of the wording to become eligible. So they always have that option. Next slide, please. If you have filed a bankruptcy, applicants that are operating under an approved plan of reorganization under either a Chapter 11, Chapter 12, or Chapter 13 bankruptcy and meet all program requirements are eligible for funding. Okay, so again, even if you have filed for bankruptcy under an 11, 12, or 13, but you have an approved plan of reorganization and you meet all other program requirements, you are eligible. An applicant, however, is not eligible if, again, it has permanently closed, it has filed a Chapter 7 liquidation bankruptcy, or either a Chapter 7, 11, 12, or 13 bankruptcy does not have an approved plan of reorganization. And just for clarification, permanently closed does not include businesses who are temporarily closed, but are going to still be in operation or have reopened. Next slide, please. Since the SBA does have many other relief programs tied to COVID, we want to talk about how the other programs impact the RRF. For the Paycheck Protection Program, any funds, whether you have received forgiveness on the PPP loan or not, any funds that you have received under a specific EIN, ITIN, or Social Security number associated with a PPP loan is automatically deducted from your award calculation. Okay, so if the applicant received a PPP loan, the applicant must use the same employer identification number or ITIN or Social Security number for its Restaurant Revitalization Fund application. If the applicant applied for a first draw PPP loan for multiple locations under one employer identification number and subsequently applied for second draw PPP loans under different employer identification numbers, the applicant must provide the employer identification numbers for each entity that received second draw PPP loans. Okay, so upon applying for a Restaurant Revitalization Fund award, applicants must withdraw any outstanding PPP applications. So what I want you to know is that effective Tuesday of this week, the mainline credit unions and finance and banks have used all of their allocated PPP funds. And if you have an application pending with one of them, please withdraw it. All right. Because that PPP loan, again, if it was approved and funded, needs to be deducted from your award calculation. The applicant must not have a pending application for or have received a shuttered venue operator grant from the SBA as well. So again, the PPP program has a direct impact on the RRF, as does the shuttered venue operator grant. Next slide, please. This is a very important attestation by the applicant. All applicants must certify that current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. That is an attestation that is required as part of the application process. Next slide, please. What are the eligible uses of funds? Well, this is an interesting one, so we're going to go through this a little bit in detail here. For business expenses, all payroll costs, including sick leave, family, parental leave act money that is paid by the employer, is an eligible business expense. Business utility payments are also eligible. However, I want to take a look really quick. The service had to have begun before March 11th, 2021. Business maintenance expenses are also included here. And in this case, what I do want to say is if you're an existing restaurant and you've had to update or replace your HVAC system, that is an eligible business expense under this program. Also, if you are in the food truck sector and you have a truck that fails and needs to be replaced, that is also considered an eligible business maintenance expense. Business supplies, including protective equipment and cleaning materials, is all eligible. Business food and beverage expenses, including raw materials for those of you who are producers, all of that is eligible. Covered supplier costs, if you have, again, supplier agreements in place for services or product, those are eligible. Other business operating expenses, such as insurance, marketing, fees, licenses, legal costs, point of sale equipment, anything else that's an operating expense in your business is eligible. And as I noted before, regarding the food trucks and the HVAC may be replaced. Under construction expenses, only the construction of outdoor seating is eligible. No other expansion costs are eligible under construction. Related to business debt, I do want to point out here that the debt has to be in the name of the business. If you have principal, interest, or principal and interest payments on your loan, the monthly payment may be made using the RRF award proceeds. Okay. The one exception here that I do want to point out is that if you have put eligible expenses on your credit card, you may pay off the amount of that credit card balance that is associated with eligible expenses. All right. You may also use the proceeds for any of the three listed categories here to bring any past due expenses current, so long as they were incurred between February 15th, 2020 and March 11th, 2023. So I think that covers everything I want to do on that slide. Next slide, please. When do I have to use the funds? Well, the funds must be spent on expenses that were or are incurred between February 15th, 2020 and March 11th, 2023. However, if the business permanently closes after receiving the award, the covered period will end immediately when the business permanently closes, or on March 11th, 2023, whichever occurs sooner. Any funds not spent on eligible expenses by the time the covered period ends, funds must be returned to the government. Next slide, please. The other thing I do want to mention here is that there will be a use of funds assessment that the awardees will have to complete. After the total awarded funds have been exhausted, entities must provide a detailed expenditure report and certification for the required period. So until the applicant completes the use of funds assessment beginning December 2021, applicants are required to provide self-reported, unaudited data detailing the use of distributed funds each year through 2023. So you will need to maintain records to adequately indicate and support the use of the funds. The use of funds assessment will be available through the SBA portal, restaurants.sba.gov, and the SBA will provide additional guidance in terms of reporting requirements and procedures in the coming weeks. So please stay tuned for that if you are an awardee. Next slide, please. So now we're going to talk about how to calculate your potential fund amount. Well, there are actually 4 calculation methods. So we're going to start with calculation 1. It is the simplest and easiest of all. If the applicant was in operation prior to or on January 1, 2019, what you do is you take your 2019 gross receipts, you subtract your 2020 gross receipts, and you subtract your PPP loan amounts. Again, they all have to be related to the same tax identification number. When you go through the application process, the PPP loans will automatically populate in your application online for the loans that are related to the tax identification number you enter in at the beginning of the application process. Next slide, please. Calculation 2 is specifically for businesses that began operations partially through 2019. So what you do is you take your 2019 average monthly gross receipts and you multiply that number by 12 to achieve an annualized gross receipts number for 2019. Then you deduct your 2020 gross receipts, and again, your PPP loans are subtracted from that amount. So what I do want to point out right here is that those businesses who partially opened in 2019 do have the option of using calculation number 2 or calculation number 3, which I will be going over next. However, we do want to point out consistently, regardless of the business type and situation, if you use calculation 3, it could require longer processing times when you apply. And at this point, I do want to say the anticipated turn time from date of application to funding is anticipated to be 14 days. So just want you to keep that in mind. When you use calculation 3, again, it could be longer than 14 days. Next slide, please. Calculation 3 is for 2 different types of businesses. One is applicants that began operations on or between January 1, 2020 and March 10th, 2021. That's one category. The other category is applicants who have not yet opened, but have incurred eligible expenses as of March 11th, 2021. And it has to be from, again, the eligibility period onset of February 15th, 2020 to March 11th, 2021. What you do is you total the amount spent on eligible expenses between February 15th, 2020 through March 11th, 2021. Then you deduct 2020 and 2021 gross receipts. And then again, the PPP loan amounts are deducted from that. So you end up with an award amount. Again, as I indicated earlier, applicants that began operations partially in 2019 may also use calculation 2 or calculation 3. But again, the caveat here is that calculation 3 will likely take a longer processing time. Next slide, please. Steve and I added calculation 4 when we were going through this. And calculation 4 is actually a combination of calculation methods 1, 2, and 3, depending upon the situation. Okay. So again, the aggregate funding amount continues to be limited to $5 million per location and $10 million for the applicant and its affiliates. But again, is for applicants that have operated multiple locations, but they opened at different time frames or may not yet be open. So the example that we put together here is, let's say an applicant owns a restaurant that has been open since 2015. And then they opened another restaurant that's been in business since 2020. The applicant may use calculation number 1 for restaurant 1, and then calculation 3 for the second restaurant, and come up with an aggregated amount less the PPP loans associated with the 2 operations. Next slide, please. And I do want to say calculation for, again, in all likelihood, will result in a processing time of more than 14 days. So when we're talking about 2020 gross receipts, we want to make sure that you state the proper amount. So we do not want you to include any of the following funding that you received in your 2020 gross receipts. Okay, so if you received Paycheck Protection Program loan, first draw or second draw loan in 2020 or 2021, please make sure that those things are not included in your 2020 gross receipts. If you received what we call Section 1112 payments, which were the payments made by the SBA on eligible loans that were either guaranteed by the 7A guarantee program, or the SBA portion of a 504 loan, or again, the guaranteed portion for a micro loan. The SBA made payments on those in 2020 and 2021. Please make sure that those payments are not included in your 2020 gross receipts. And if you received funding from the economic injury disaster loan, or the idle advance, or the targeted idle advance, or the supplemental targeted idle advance, please make sure they are not included in your gross receipts as well. If you received funding from state and local resources in the form of grants, that money should be removed from your gross receipts. And if you are a blind business owner that did receive funding from the Randolph-Shepard Act financial relief and restoration payments appropriation, please make sure you don't include that in your 2020 gross receipts as well. Next slide, please. Now we're getting down to the nitty-gritty. How do you apply? Well, first, I'm going to change the order here. What you do need to keep in mind is that if you have a point of sale vendor and they are Square or Toast, they are approved vendors for direct applications. So again, if Square or Toast is your point of sale provider, you may apply directly with them, and that will save you from having to set up account information. All right. And the other thing I do want you to know about the point of sale providers is that Clover and Aloha, also known as NCR, may provide point of sale reports only. And there is a an indicator code in the regular platform for you to enter related to Clover and Aloha. All right. If Square and or Toast are not your point of sale provider, then you apply directly through the SBA platform at restaurants.sba.gov. And you do need to set up an account. Many of you have probably already done that. And what you need to provide is an email address. You do need to enter in a US cellular phone to be able to receive texts from the system. And you pick a user ID and a complex password. You also set up knowledge-based answers to questions. Please be sure to write them down so you remember what the answers are, because you will need them when you go to submit your application. Okay. And then the third methodology that we have is you can apply via telephone, and that is through 844-279-8898. Because a telephone application is a manual process in terms of creating the application documents, it will definitely have a longer processing time. And what we are doing is we are encouraging people to, if you have a situation where you have intermittent internet access, we're encouraging you to go to either a library or another source provider where you can apply electronically. All right, we're on to the next slide. What documents do you need in order to apply? First, you do need to have the 3172 form. That is the one you're entering in data on electronically if you are using Square, Toast, or the portal at the SBA. It does need to be completed, initialed, and signed. All right, and then as part of the verification process for tax information, you do need to do the 4506T, which can be completed and signed by the applicant. Completion of this form digitally on the SBA grant platform will satisfy this requirement. Regarding gross receipts documentation, any of the following documents demonstrate gross receipts or, if applicable, eligible expenses. Business tax returns, IRS Form 1120 or IRS Form 1120S. Those are for the corporations. IRS Form 1040, Schedule C or Schedule F. Those are for those of you who are applying as sole proprietorships or for tax treatment as a sole proprietorship or a farm. For partnerships, the 1065, including K1s, are needed. You do need to provide 3 months of bank statements. We're going to talk about that here in a few minutes. And then you may have to provide externally or internally prepared income statements or profit and loss statements. And last but not least, you may have to provide point of sale reports, including the IRS Form 1099K. Next slide, please. When you're looking at calculation 1 and 2, you do need to have the SBA Form 3172, the 4506T IRS form, and then your 2019 gross receipts from your appropriate tax return. You also need to provide the most recent 3 months of bank account statements. There is an automated account validation system embedded in the electronic application process that enables you to select your financial institution, and it cuts down on data input errors. The 2020 gross receipts need to be evidenced by at least one of the following documents. The preferred ones are your federal tax returns filed, but you can also use a point of sale report. Accepted, which may delay the review past the estimated 14-day turn time, is externally or internally prepared financial statements. such as an income statement or profit and loss document. These documents do need to be signed, dated, and certified as to accuracy by the applicant. Next slide, please. For calculation 3, it's a little bit different here, but what you need to have is the 3172 form, the 4506T form, and the 3 months of bank statements. And then your 2020 and 2021 gross receipts, at least one for each year. Again, the preferred method is your 2020 tax returns or prepared but not yet filed 2020 tax returns, 2020 point of sale reports, and 2021 point of sale reports. The other eligible documentation for expenses, and you do need to provide at least one of the following, is the preferred is a CPA comfort letter, which does provide the fastest review for the SBA. And you want to include all of the expenses related to your payroll documents, your outdoor seating expenditures, your business debt relief, and eligible business expenses. Accepted documents may be internally or externally prepared financial statements, again, income statements or profit and loss statements, signed and dated as to their accuracy by the applicant. Okay, and again, you do need to provide the information for your eligible expenditures. Next slide, please. In addition to those documents, for applicants that are brew pub, tasting room, tap room, brewery, winery, distillery, or bakery, and a bowling alley, you need to provide documentation to evidence that on-site sales to the public comprise at least 33% of gross receipts for 2019. And you may include tax and trade bureau forms and other state and local forms filed, or again, internally created reports from your inventory management system, sales reporting, or accounting software, that you do need to evidence that in order to be eligible. The same is true for applicants that are an inn. I do want to indicate here that hotels and motels are excluded. Distilleries in the state of Washington are a little bit challenged because they are limited to 30% on-site public sales of beverage and food by state law. What we do want to point out is that bipartisan document along with the governor's signature was sent to the SBA administrator in an effort to try and get through this issue. Next slide, please.
All right, Janie, I'll
take it over.
Jump in here. That was great. You know, this. I wish that all of these programs could be simpler than they are, but it's not the case. You know, the legislation in both the Economic Aid Act and the American Rescue Plan Act did require the SBA to put in place various techniques to prevent and minimize fraud, which was an element of last year. And so some of those elements have complicated things where they, you know, verify who the applicant really is and whatnot. So part of best practices relative to that means providing the complete documentation. You know, if you don't do it properly, you aren't prepared when you apply, or if you've already applied and you weren't prepared, you may have the ability to go back in and make a modification and add the document that you should have done on the first round. The problem is, though, is that you're going to be then sent to the end of the line relative to this first come, first served process. And it's just not something that you want. So if you have already applied, I hope that your documentation was really complete and that you were prepared when you applied. And if you haven't yet, they are still accepting applications here. It's only been open for just this week, since Monday. Then I really recommend that you make sure that you are really ready. Also, as we've mentioned before, leverage your resources. Leigh did put her contact information to help you get pro bono CPA service if you need it. The SBA can't make corrections, but those who do require them need to contact the call center hotline at 844-279-8898. But as I mentioned, if it's a substantial one, you will be placed back at the end of the line relative to the queue in this first come, first serve funding. With 186,000 applications already in the queue, getting to the end of the line could potentially jeopardize your funding if the funds run out and they are not restored or renewed or reappropriated additional funds from Congress. Those who still intend to apply for the PPP, you have to complete your PPP application in advance. That's really now a moot point because as you may have heard, the funding ran out. The SBA announced that the funding ran out on Tuesday, with the exception of 4 or 5 certified development financed institutions, CDFIs in the state of Washington that are able to help underserved low-income and minority applicants with the PPP in the set aside of the PPP. That there's maybe $6 or $7 billion left in that, although I suspect that's being consumed pretty quickly as people are looking for those final PPP application lenders who may be able to help them. But if you're going to do that, you have to apply for the PPP first. And hopefully those of you who did, because then that PPP amount, as Janie said, is going to be reduce the amount of your restaurant revitalization fund award. As I had mentioned, one of the things that's really kind of a hidden tip in this thing is that everybody should apply and should have applied, and looks like most did. 186,000 applications in the first 36 hours. And that means that although there is this priority period of the first days, and most people are aware of this, the SBA is going to accept all eligible applicants, but only applications from small businesses owned by women, veteran, and socially economic disadvantaged applicants are going to be funded during that period. And after day 22, all applications will be processed. But the hitch here is that if you were not part of the initial queue and up front in the first 186,000, and you do not fit into the priority period, you are going to be closer to the end of the line if you wait to day 22 to apply. So they are going to start first come, first served based upon all of the applicants that started on day 1. So small business, as I'd mentioned, priority groups, at least 51% owned, and the management and the daily business operations of the applicant are controlled by one or more the individuals, women, veterans, and socially and economically disadvantaged. Applicants must certify in the application that they meet the eligibility requirements. An example who has 5 owners who each own 20% of the applicant. Keep in mind, the real applicant is the business entity. 2 owners are veterans. 1 owner is a socially and economically disadvantaged individual. The SBA will consider this applicant to meet the requirement that at least 51% of the applicant is owned by a priority group. That's how they're determining the priority situation. Socially disadvantaged individuals are those who've been subjected to racial or ethnic prejudice, cultural bias because of their identity as a member of a group without regard to their individual qualities. Individuals who are members of the following groups are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Hawaiian Natives, Asian Pacific Americans, and subcontinent Asian Americans. Economically disadvantaged are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business who are not socially disadvantaged. Disabled and LGBTQ need to provide documentation of their disadvantage. That documentation includes the past 3-year average income has to be less than $350,000. net worth is less than $750,000, and the fair market value of their assets is less than $6 million. So entry, reorganization for purposes of qualification. In other words, reorganization. If you reorganize during the application period for the qualification of the part, will result in an automatic disqualification. So once you set this application in based upon the calculation, eligibility criteria and the calculation criteria, do not try and reorganize your business during that time frame. $5 billion is set aside for applicants with 2019 gross receipts of not more than $500,000. That's a big deal. We really appreciate the work that the National Restaurant Association and the Hospitality Association have done in putting this, working with Congress to get this program built. It really has become one of those things that that we think is real advantageous, one of the better programs overall, even though it does serve primarily the restaurant and food service business. But an additional $4 billion is set aside for applicants with gross receipts from $500,000 to $1.5 million, and then an additional set aside for applicants with 2019 gross receipts of not more than $50,000. That's $500 million set aside for those. Those are really the smallest ones, and that's substantial. They will reallocate these funds depending upon those who apply and what that situation is. Now I'm going to run through, without a lot of detail, I'm going to run through the application portal and give you a sample of slide of what it looks like for those of you that maybe haven't done this yet. But even for those of you that have, this demonstrates a couple of things that I just want to point out. First of all, there's a whole section on your overall eligibility so that those who are really and correctly and honestly certify their particular situation don't wind up completing this when they really aren't eligible. You'll notice this blue bar or partially blue bar at the top. Those are the various sections that you go through as you go through this. And then on the left-hand side of this is your application progress status, so that you get to the point where you understand your completion. A couple pages on this eligibility, as I had mentioned, pretty important that that gets right so that you don't get into completing this whole thing if you really aren't eligible. Then there's the basic business details. This is pretty common in these applications. You've got to provide, your actual status, what's your name and address, and how it's organized, and the ownership basis, and your restaurant type. So all the business details, your EIN, tax identification number, phone numbers, that sort of thing. So real important that you get all of this stuff input and correct. They are going to look up public record information to determine whether or not you've got this right. So keep that in mind. Are you affiliated? In other words, does the applicant have affiliation? And do you need to add a business owner or various owners involved in ownership of various other additional restaurants or restaurant groups with separate EINs? You've got to disclose that information because there are rules regarding that affiliation. And then you get to the award calculation section. This application does move along pretty well. And so another thing that we're pleased about is how well they did this. And I don't know if you noticed, but typically in the bottom right-hand corner of some of these slides, they actually do have something called the knowledge base that Janie referenced. You can click on that, the bottom right-hand corner of most of the pages of this portal. If you've got questions or you need to look up something. One of the cool things that they did this time is that it's interactive, so that's a pretty good thing. So here you go through the various things to identify the purpose of the award, and, whether or not you got any PPP loans. You do have to notify them of both PPP loans if you got a first draw and a second draw. So then the final award calculation, and one of the slides back in the calculation 4 that Janie and I had put together, which actually is identified as a fourth calculation in the SBA portal that involves this table 4. And a lot of people miss this. We did get some questions about this. You have to scroll down to find table 4, where you identify your various locations and how you utilized either calculation 1, 2, or 3 relative to your multiple locations that may have opened at different times and fit under the different calculation criteria. That's what calculation 4 is about. And it requires an entry into a table 4 that you scroll down at the bottom of this page to complete. The single biggest issue that all of the funding programs have had in the from the PPP, the Working Washington grants, the EIDL, the EIDL Advance, has been a failure of getting the correct deposit account information input into these things. This particular portal does have a pretty cool thing where it connects to this program called Plaid and inputs your bank information relative to doing that so that it's actually correct. For the bigger banks, you should know that the routing number may not be the same for every location for bigger banks. And so you've got to know which applies specifically to your branch where your account is located, what the routing number is for that. This Plaid can assist with that, but if it cannot find your particular branch, you're going to have to enter manually, and that's what you would do in this section. If you had to do it, then you would have to enter and populate this manually, which then has an additional burden on you to get it right. Then you've got to upload the supporting documents that we've been talking about, that Janie mentioned previously. You've got to get this right. If you miss this and you have to go back and modify your application, you may be wind up being subject to being the end of the line on the queue. So that has to be signed, and the certifications from an authorized owner. And you've got to be able to make sure that that information is also correct, and you've got it all in there. And then you've got to make the certifications here and be able to complete this and then sign and submit the application. And when you do, you'll wind up at this summary page, which is excellent relative to making sure and clarifying that you've moved through all of the elements of this and that it's correct. And when you get to this, one of the things that we've been advising, I don't know if Janie mentioned this, but that you take a screenshot of each of these as you go through so that you know what it was that you actually put into this application later on. If there is a question, once they have started processing of all of these, and they have to reach out to you because something is incomplete or not correct. That way you would know what you put into these application documents and the online portal. Additional help. There is a hotline. I think Janie mentioned this number once already, 844-279-8898. It's open from 8 a.m. to 8 p.m. Eastern time. There is the local office, SBA, where Janie works. And she and her colleagues answer this telephone number at 206-553-7310. Help is available in multiple languages on this hotline that we mentioned above. And if you want to just access the knowledge base and the FAQ at any point in time through this application process, which you might want to do if you've already entered your application and you get contacted to have to provide some additional information and you may not understand why you were contacted, this is a great resource for you to go to try and understand what's going on. So with that, I will see if doesn't look like there's any other questions. We've had a small group, but we do expect that this recording will be of use for members of the Seattle Metropolitan Chamber. We really appreciate working with you. I do have one other slide. I just want to let you know, I'm with the Washington Small Business Development Centers. We've got 25 locations around the state with 34 certified business advisors. If people are interested in getting to us, fastest way to reach us is through an email at washington@wsbdc.org or 833-492-7292. And with that, Janie, I'm going to let you just sort of wrap up and talk about the best way to get a hold of you. I may have taken you by surprise, but.
I think you're muted, Janie.
I am. Thank you, Steve, for doing the back half of this. Excellent job as always. And I again want to share my appreciation with having us be given the opportunity to work with your client base and scope of people looking at this. So I just wanted to let you know again that 206-553-7310 number is a message line. The majority of the employees at the SBA are working from home, but we do our best to get back to you the same day you call in, as timely as possible. My email address is also listed here in case you do have any questions. You can reach out to me directly as well. And I just want to say thank you again to Lee and Sari. And I'm going to turn it over to you. Sari, go ahead.
Okay, well, thank you for your time today. We really appreciate it. And we will be posting and sending out these resources that you have all mentioned. And hopefully lots of folks are able to tune in later and be able to access those resources to get access to the fund. Thank you and have a great day, everyone. Bye.
Thank you.